Sridhar Sivaram has also joined us from Enam. Sridhar, the bond market's incredulousness is more on the tax assumptions and the crude assumptions and therefore expenditure assumptions.
Right.
Do you think it's right? What's your first comment on the budget numbers?
So I think the numbers look okay, but the fact is that the macro for India has deteriorated significantly over the last 2 years. I mean, just the fact that commodity prices in general have gone up isn't great for the macro given the imports that we have for crude. So I get to that extent, and the fact that we've had a fiscal slippage. I mean, the point is that whether it was GST or not, we had a fiscal slippage, and even for the next year, we are penciling in at least a 0.3 basis points extra than what was the glide path. So I guess to that extent, the bond market is more sensitive to these than the equity markets. So I guess to that extent, it's fair. So I don't see any issues with that.
But how damaging could this long-term capital gains be? I mean, do you see investors pull out of our markets, or do you think it's something that will be taken in their stride because of the kind of money that people are making and the growth potential that India is seeing?
Yeah, so I've had extensive discussions with the policymakers over the last few years, and this was very much on the card. And one of the reasons I think why it didn't come the previous years is because they wanted a level playing field for the foreign investor and the domestic investor. So the Mauritius and the Singapore treaties were renegotiated, and from 1st April, FIs are also paying tax. So everybody is on the same page, and now, so the idea for the government, from whatever I could understand, is they didn't want to leave any income tax-free because they think that there is a lot of possibility of, certain transactions which are not fair. So to that extent, I think that was the government thinking. From a FII standpoint, I think it does increase the extent of paperwork, and the entire process of compliance just goes up. So to that extent, it is a hassle. Keep in mind that short term they were already paying tax, so this is just an added issue and hassle. I don't see this as a major issue, but keep in mind that India has already been underperforming. Even last year, we may be happy with a 30% rise, but emerging markets were up about 34-35%. So, and even as we entered this year, already emerging markets are up 12%, and we are like 3-4% up. So we are underperforming. So some of this is already factored in, I would say.
Okay, so Sridhar, good morning. So the counter question is: so we underperformed on the way up. Is there a risk that we might have seen a melt up in global markets already, and on the way down as well, we could sort of participate and maybe with more velocity?
Yeah. So I think the Indian market falling, I think broadly will coincide with what happens to the global market. As long as the US party is continuing, I don't see Indian markets on an isolation going down or going in a different direction. Yeah, the question is what happens if there's a meltdown? Surely India will fall. But keep in mind that many of the FIs aren't as overweight India as they were in the past, because some of the other markets, especially the large markets like say a China or a Korea, have done extremely well, and the overweights are sitting there. So I would expect that we wouldn't see a disproportionate fall, but broadly in line we could see a fall.
That's all. Okay.
I would say because I don't see FIs are hugely overweight India. Keep in mind that China was up 50% last year. It's already up 12% this year. So, and it's like 25% of the MSCI weight. So it doesn't help any fund manager to be underweight a large market which is going up with such velocity. So I don't see, yes, everybody is overweight India, but nothing significant.
Okay, what about domestic investors? They have been the fuel for the rally last year. Will there be incremental shift? I mean, how much can the index fall?
Yeah, so I think capital gains alone cannot be the reason for somebody to invest in the stock market. I mean, you're going to pay gains tax on the gains. So if this was the only deterrent, then I think nobody would invest in. We already have short-term capital gains. My only fear is that the difference between the long-term and short-term is only 5%. So the incentive for me to hold on to a year is much lesser. If I suddenly see the markets going up, I'm making 30-40%, I may want to sell because...
And no indexation benefit.
Yeah, and no indexation benefit. And keep in mind that there's also a technical issue till March that if stocks go up too much, up to March, there is no long-term... I will want to sell it. So this market will get capped
Naturally,
till March it will get capped because there is a technical issue and everybody will want to take benefit of that. So I think I have to look at beyond March. And anyway, our expectation is that we need a time consolidation or a price correction.
Sridhar, your thoughts on the growth picture that we're seeing, especially with some of these pockets like two-wheelers, commercial vehicles. You like these spaces?
Yeah, so we like the domestic space currently. So be it on the commercial vehicle space, consumer discretionary, and also we like financials. So we think that the domestic space is looking much better because we are expecting growth to pick up. We're already seeing early signs of that if you look at some of the high frequency data. So we think this space is looking quite interesting. Once the dust settles down of all this budget and other things, I think the market will start appreciating some of the changes that are happening on the ground and the growth coming back.
I want to take...
Just want to point out, PC Jewelers, that stock is now down about 6%. Vakrangi, of course, we've been talking about hitting circuits for 3 days now. Recently Vakrangi had bought some stake in PC Jewelers. So, the market is a bit nervous about that deal. So, that's why you're seeing PC Jeweler also from the recent highs. It started to correct quite a bit. So, that's one stock which is clearly under a bit of a pressure.
Just a special programming note which has been flashing for you. A day after the union budget, you can catch the Finance Minister Arun Jaitley in an open house with India Inc., taking questions from them and decoding the fine print. That's only on CNBC-TV18. It's the only business channel which will present this event. Shireen Bhan will be moderating the event from 9:35 onwards. Well, Sridhar, you said financials. That's the one that's facing so much pain. So which part of the financials?
So corporate facing is what we like because, as I mentioned last time also, that we are very bullish on the NCLT process. We think the market is going to get surprised. We've already seen some surprises. I spoke about a cement company, and we've seen the actual number is substantially higher than the debt amount. We think even some of the large steel ones, I think market will be surprised with the, keep in mind that the cycle has turned. So the bidding is going to be very aggressive. But we're still keeping a view that the 50% is a fair number for provisioning because we also have gas-based power plants which may have 90% write-offs. So we think of 50% is a fair number. There's a possibility that there could be some write-back, but that's not our base case assumption. If we get it, is great. What happens is that this improves the balance sheet of the banks because what is an NPA suddenly becomes performing. Also, it improves the P&L because these are non-income generating assets. Suddenly, they become income generating. So you'll have a double impact of improving balance sheet, improving profit and loss account. So we think this will play out over a period of time, that once we get some of the NCLT process and the results, which will be closer to end of March, market will be more appreciative of what's happening. Yes, they may have some issues with bonds, especially the PSUs, but those are things which market will tide over. And we think that there's an opportunity here, and especially in the financials, we are most bullish on the corporate-facing banks right now, both PSU and private.
Okay, I want to raise one point which we have not been discussing. Yesterday, personal finance guys, Anuj, were pointing out that balanced funds will, LTCG is going to hit the mutual funds as well. But if you're a debt mutual fund, you get indexation. So most of the balanced funds will become 51% into debt, so that they will get the indexation benefit and not the LTCG. Sridhar, will that mean, more move into debt and therefore incrementally less money for equity?
Yeah, but these are really small changes here and there. I'm sure, the government will figure out if there are any loopholes that are left here. And they've been very smart in plugging some of these loopholes. Like, I think ULIP is still not very clear whether ULIP comes as LTCG or not. So I think there is still some question marks on that. So I think these are some smaller issues which will get plugged. But I think broadly, I don't see a major change in the domestic flows, as in people stop putting money completely because there's a 10% LTCG. Keep in mind that the avenue for other opportunities are still quite less, be it gold or real estate or even debt for that matter. So I think the flows will continue, maybe a little bit of tapering here and there, nothing significant.
Okay, the market is actually correcting some more. So there's a second round of sell-off that we're seeing right now, especially in the mid-caps, almost a 400-point slide. And, you know, stocks like Cummins are now starting to fall quite a bit, 7% there. All the jewelry stocks are just getting hit very hard. Not just PC Jewelers, Thangamil Jewelry, etc. are all down and out. It's looking quite ugly now.
And you know, this will happen on days like today, because you know you would see sell on rallies sort of play out on individual names. And you know, we've been talking about mid cap, but the index itself is now down 100 points. So you know, on days like today, you should not buy the first dip. Observe what the low for the market is in the first hour. Opportunity to buy will come, definitely will come, but this market is overheated, and global Q is also looking slightly weak. Also, you know, on this banks also, we're seeing second round of selling now on PSU banks. Couple of them. Canada is already at the low point. IDBI Bank is at the low point right now. I think that is one trade which will work today, which is that, you know, on any minor bounce you will see selling in the PSU bank. So that trade will work. The likes of PC Jeweler, Manappuram, Sonia, DHFL, the concentrated positions, that trade will work today. So let's see. But you would want to see the low of the day till 10 a.m. and see if that's getting respected or not.
7.86 on the old 10-year. And 7.65 on the new 10-year. I think that's also having its impact. Okay, Sridhar, already bargain basement prices, or do you think people should wait? This is
I think on the mid-cap and small-cap space, we've seen huge rallies last year, and they've had significant outperformance over the large-cap. Our view has been that large-cap is much safer right now than the mid-cap. And typically, when you see corrections, the mid-caps tend to fall you know, much sharply than the large cap. So our bias is still more towards the large cap and some select mid caps here and there.